If you pay someone per job, per class, or per project, do you know whether the IRS considers them an employee or a contractor? And more importantly, do you know what happens to your business if you've been getting that wrong? This is one of the most common and most costly mistakes I see Indiana small business owners make. By the end of this video, you'll know exactly how to tell the difference, what's at stake if you get it wrong, and what to do about it. Hi, I'm Jenae Taylor, Director of Payroll Services at TMA Accounting right here in Indianapolis. I'm a certified payroll professional, and this question, employee or contractor, comes up all the time with the Indiana small business owners we work with. So in this video, I want to walk you through the actual difference between the two and leave you with a clear path forward. Let's go. Here's something a lot of business owners don't realize. The difference between an employee and a contractor isn't about which tax form you use. Yes, employees get a W-2 and contractors get a 1099, but that's the result of the classification, not what determines it. What actually determines it is control. Who's in charge of the work that gets done? If you tell someone when to show up, how to do the job, and what tools to use, that points to an employee relationship. If they set their own schedule, use their own equipment, and decide how to get the work done, that starts to look like a contractor. The IRS uses a three-part test to figure out which one applies. Behavioral control. Do you direct how the work gets done? Do you train them or walk them through specific procedures? Financial control. Do you set their pay rate, supply their tools, or are they your only client? Type of relationship. Is this an ongoing arrangement, or are you offering benefits? Is this work central to your business? The more yes answers you're giving, the more that person looks like an employee, regardless of what you've agreed to call them. Let me make this a little more concrete because I see this in Indiana businesses all the time. Fitness centers paying instructors by the class, dental offices bringing in contract hygienists, restaurants using seasonal help, HVAC businesses paying technicians by the job. These are all really common arrangements here, and in all of them, the line between employee and contractor can get blurry fast. Here's a good example. If your fitness instructor shows up every Tuesday and Thursday, uses your equipment, follows your class format, and only works for you, they're almost certainly an employee, even if you've been calling them a contractor and everyone's been fine with it. And that last part is where I want to gently pump the brakes. It's been working fine doesn't necessarily mean it's been done correctly. It might just mean no one's looked closely yet. I want to be honest with you about what misclassification can actually cost, because this is where it gets serious. If the IRS determines you've been misclassifying workers, you could be on the hook for back payroll taxes, your share of Social Security and Medicare, for every worker who was misclassified. On top of that, there are penalties for failing to withhold taxes the right way. And in some cases, legal exposure for overtime or benefits the worker should have received. The IRS can go back multiple years, so a classification mistake you made when your business was smaller can become a much bigger issue as you grow. One more thing worth knowing. If you reclassify a worker mid-year, say you switch someone from contractor to employee, that raises a red flag with the IRS. If nothing about that job actually changed, it's worth having a clear explanation ready. Okay, I want to clear a few things up I hear constantly because these are the beliefs that tend to get people into trouble. Well, they asked to be a contractor. I hear this one a lot. But the law doesn't follow preference, it follows the facts of the job. What the worker wants doesn't change the classification. They have an LLC, so they're automatically a contractor. Having an LLC doesn't change how the IRS views the relationship. If you control how the work gets done, business structure alone doesn't protect you. I sent them a 1099, so we're covered. Filing a 1099 doesn't make the classification correct. It just tells the IRS what you think the relationship is. If they disagree, the 1099 is actually evidence in their favor. They only work part-time. Hours do not determine classification. Part-time workers can absolutely be employees. If any of this has you thinking, okay, I'm not totally sure we've gotten this right, that's actually a really good place to be because now you can do something about it before there's a problem. Here's where I'd start. The IRS has a detailed checklist at irs.gov that walks through the 3-part test with real examples. We'll link it below. Document your arrangements, contracts, job descriptions, pay structure, how much direction you give. Good records support your decisions if you're ever questioned. And if you genuinely want certainty, the IRS offers something called Form SS8, where you can formally request a classification determination. Just know it's binding once they decide, so go in with your eyes open. Most importantly, if you're unsure, talk to someone who knows payroll. This is exactly the kind of thing where a conversation can save you a lot of time, money, and stress down the road. If this was helpful, I'm really glad. There's a lot more where this came from on Small Business Playbook. We cover payroll, taxes, bookkeeping, and all the behind-the-scenes stuff that keeps Indiana businesses running. If you want to learn more about how TMA can help, or you'd just like to have a conversation with our team, head over to tmasmallbusinessaccounting.com/smallbusinessplaybook. From there, you can explore our services, use our price estimator, or schedule a call. And if this video helped you, hit the like and subscribe buttons so you won't miss what's coming next. Thanks for watching, and I'll see you in the next one.